I know that this season has been strange because we have got to sit across from the table and ask the questions we'd like to ask and do it the way we'd normally like to. So I figured I would try this, give it a shot, try to answer questions, and then I'm recording it to share, because if you have a question, somebody else probably does too. And then there's also just a lot of things that have happened this season that I thought I would bring up and make sure everybody's aware of. One, tax season didn't start till the 12th, so we've gotten about 500 tax returns come in 2.5 weeks. So we're behind. So I want to thank everybody for being patient with us. We're going as fast as we can, but I got to still make sure we take the time to do them right. I know we've been doing the e-signature. That's worked pretty well for a lot of people so far. I think I've only had one person that the e-signature didn't work, so that's working well. If you didn't know, we've closed the office because of COVID. We had a scare back in January where we had to send everybody home, which made me really concerned. How are we going to survive tax season if I can't even be in the office? So we've had to make some changes there that I tried to avoid, but we did what we had to do. So when you come to pick up your return, if you'll call, Jolie will come out and bring it out to you in the parking lot, or somebody else. I've done it some when I can to help out too. But that way we're trying to limit exposure in the office as much as possible. I've got a list of stuff I was going to go through. I am hoping you guys have some questions too. So one of the things that we still don't know, and unfortunately this tax season, there's a lot of those, but there's unemployment. And so tonight I'm going to try to go over some individual stuff and business stuff, and then whatever you guys want to talk about as well. But a lot of people received unemployment last year, and for now it's taxable. One of the things that's been rumored, and I don't think we're going to know probably till next week, is they may change it. And so if you have a large unemployment, we may want to sit and wait for a couple of weeks and let them get this new bill through before we file the return, because some of you got $6,000, $7,000, $8,000, $10,000 in unemployment, and that's a substantial tax bill. And if they pass it, the only way that I know we're going to be able to fix it is to file an amended return. So I wanted to make sure everybody was aware that that's something that's still in play, and we don't really know how that's going to work out. In my mind, it makes sense if we're going to give the businesses a lot of PPP money and then take it away and not make them pay tax on it. It would make sense that employees would get the same kind of treatment. Whether any of us should get that treatment's beyond the scope of my importance, but that is something that I think could happen. So I wanted people to know about that. Also, a new thing this year is charity. So a lot of us don't have enough to itemize anymore. But if you do give any cash in small amounts, you need to let me know, because we can take a $300 deduction right on the front page that we've never been able to do before. And I think that's just this year. But for a lot of you, that could be $100 tax savings just from that. So if you do give to charities, make sure you send that in to me, because that's something new that could be helpful. Another one on that same vein was a form 8283, and what that was for was non-cash charitable contributions. So if you're somebody who donates to Salvation Army, disabled vets, Goodwill, we were not able to file your return because the forms were not approved yet. That happened yesterday. So I know a couple of you I was working on that were stuck. I was able to finish those yesterday. So if that's you, you'll probably get a call in the next day or two saying they're ready. If you don't, just give me a call. Maybe I just haven't got back to it. I forgot that's why what we were waiting on yours. So if that's you, let me know and I'll take a look at it. But I think I caught the ones that were stuck on that, but just wanted to bring that up. What else is there? Employee retention credit. This one is related to the small business clients. If you remember last year, we got the PPP loan, and what they said is if you got that, you could not get the employee retention credit. And what the employee retention credit is, simplistically, is that if you paid somebody wages, but they weren't able to work because of COVID, the government would give you a credit for 50% of that payroll up to $5,000. So that can be a huge credit. But the deal was last year is if you had a PPP loan, they said you can't do the employee retention credit. So we dismissed it. We didn't do anything with it. Well, now they've changed their mind. So now what they've said is, well, actually, I don't know what they've said because yesterday they released a 100-page document on all the new rules on the employee retention credit. And so I won't be able to give you my final analysis of it probably till next week. But high level, what they've said is if you were closed last year due to a COVID mandate, so the government said, especially restaurants, daycare, stuff like that, you have to shut down, you can't work, but you still paid your employees. We're gonna have to go back and look at that because if it's not the same money that we use for the PPP money, you can get a credit of up to $5,000 per employee. The kicker is you had to have been closed because of a mandate, or you had to have had your income, this is off the top of my head, but you had to have your income drop by 50% from 2019 to 2020 for any quarter. So if in the third quarter your revenue was down 50% and you were paying employees to not work, we can go back now and get a credit for 50% of that up to 5,000. As soon as your income goes back up to 80% of 2019, then that credit will stop. So I don't want to get bogged down in this because I haven't read all the latest stuff. But if you're a business person and that's you, simplistically, I just want you to say, hey, reach out to one of the bookkeepers here or me and say, I think this is something we need to look at. And then we can take a look at it client by client and see if that's something that's going to work for you, because it could be huge. And then starting in this year, they've extended that. So if you're paying people to not work and your income is down, we need to talk because you could get some huge credits. It could be worth up to, I think they're saying $14,000 per employee in credits between last year and this year. So those are massive numbers. If you're an employee, not relevant. One of the common questions I've had on the EIP or the stimulus payments, if you remember, we had $1,200 each back in April, and then we had the one in January. A lot of people are wanting to know why I need to know about that. And the reason is we have to reconcile it on the tax return, but it's not taxable. So you're not going to get dinged on it. But for instance, one I just did this morning, he had a daughter, or this afternoon, he had a daughter this year. Well, the government didn't know about that, so he didn't get the credit. So when we file the tax return now, he will go ahead and be able to pick up that credit. If you got more than you were supposed to, they're not taking it back from you. And I had one of those just 2 days ago where someone had passed away. And the way we see the law right now, even though they passed away in 2020, they still get to keep that credit. And I've seen nothing to say otherwise. So we're still getting to claim the credit for them that they didn't receive and pick it up on the tax return. But I have to have it. So when you submit your information, you got to let me know how much you got, because it's just part of how we have to do the tax return this year, just extra stuff they're making us do. But it's not taxable and it won't hurt you. Home office deductions. A lot of people have had to work from home this year. And so people are wanting to claim home office because in the past, if you work from home, you were allowed to get a deduction. That went away under the Trump bill a few years back. So even though you may be working from home, the home office deduction is not going to help you if you're an employee. It's still available for small business, but employees cannot use it. But if you worked in Kansas City usually, and they held out Kansas City taxes, and now you worked from home all last year, I need to know how many days you worked from home, because we can get a credit back from Kansas City because you were not actually working in Kansas City, unless of course you live there. If you live there, then that doesn't work. But if you live in Blue Springs or Lee Summit or Raytown, and you worked in Kansas City normally, but now you work from home and your employer kept holding that out, we can apply for a credit. I've heard Kansas City may try to fight it, but for now, we want to go ahead and claim it and then let them tell us no and worry about it later. So as you can tell, this season's just crazy, all kinds of different stuff. Another one is sick pay and family leave. So if you're a Schedule C, self-employed, and you had to close, kind of like what we were talking about with the retention credit, and could not work, or you got COVID and could not work, I need to know how many days that happened, because we can essentially get a credit for up to 10 days for you not being able to work. So I did one just actually this afternoon, right before we started. It's not huge, but she's getting an $800 credit because she wasn't able to open for a while. And so every little bit helps. So if you're self-employed and you weren't able to work before COVID, send me a note and let me know when you send everything else in, what's going on, because there's money out there and we don't want to make any mistakes. Hey, that's not fair. Somebody's drinking a beer and I'm here working. I saw that. That's okay. Good for you. Let's see, what else do we have? That one's a big deal. Another one, I think most of you know who got the PPP now, but it's not income when it's forgiven, but it could have an implication on your taxes. So one of the things, it's complicated, but if you have a loss on your business, you cannot deduct the loss unless you have enough basis or investment in the company. So if you ended up with a $100,000 loan last year and you lost money because it was just a bad year, you may not be able to deduct that loss this year because you may not have enough basis. And the rules right now are that you don't get basis until the loan is actually forgiven. So if we have some of those, we may sit tight on your tax return for a little while, because I'm hopeful that in this new bill they're trying to push through, they're going to make an adjustment and allow us to pick up basis on last year's tax return, because we all know the loan's going to be forgiven. So it's just another snafu. If you've got a loss, we may want to sit tight on your tax return a little while longer. And some of these returns, we just may need to file extensions and give them time to work through stuff in order to give you guys the best treatment, so we don't have to file a bunch of amended returns. So I think that was a lot of the main things that I wanted to cover, just to kind of bring everybody up to speed with what's going on. But mostly I just wanted to make myself available for any questions people have.
On loans?
One of the things that came up in something I was watching today is a lot of small businesses got grants from the state or city. And my understanding on those is those are going to be taxable for us at the federal level, and we're going to have to look at those grants and see about at the state. Generally, Missouri and Kansas both follow federal law, but if you got one of those, you'll need to let me know, because we may have to look at that on a one-on-one basis. Second PPP, I didn't talk about that at all. The second PPP, if your small business had revenue drop more than 25% in any quarter in 2020, you would qualify for a second PPP. And for a lot of you, that could be very helpful. But there's also a big change there. And I think I covered that last week in a separate video, but I figured I'd just hit it again. It is on your gross revenue for you Schedule C guys. So a lot of Schedule C people didn't qualify because various reasons. Maybe you took a lot of mileage. Maybe you bought a new truck and we wrote all that off. Whatever it is, you didn't have a lot of profit. And so you really didn't qualify. And so what they're saying now, as of last week, is if you're a Schedule C, you can apply for a PPP based on your sales number, not your profit number. And that's obviously a substantial difference for a lot of people. So if you haven't done that, and I was talking to somebody today on that too, that they didn't qualify last year, but now they'll qualify to get a PPP based off of their gross revenue. Problem is the form is not yet released. I've heard in the next day or two that we're hoping to get one out, but you want to call your bank right away if you didn't get one last year, and this may help you go ahead and get the PPP loan that you didn't qualify for before. But the form still hasn't been released, at least earlier I checked. So as far as I know, that form's still not out there, but we expect it to happen pretty soon. And we still don't have any guidance on it yet either. I'm expecting Treasury to give us some guidance in the next couple of days too, but so far that hasn't happened either. But that could be big, because if you qualify for that, you may also qualify for the second, and that could have a real big impact for you.
Okay, now you can hear me. Okay.
Yes, ma'am.
My question is, on these loans that are being forgiven,
Yes, ma'am.
are these all ones that were, taken out like last year, or?
Most of them were, because most of the ones that are being forgiven are the PPP loans. And those were based off of payroll.
Okay.
And then
So
there's the second PPP program, which is running right now, as well as the first. So those are the ones that are being forgiven. The
okay, not individuals then.
No, not individuals.
Okay.
On the individuals, there haven't been any loans in this program that I'm aware of. So there's nothing there.
Okay.
Another little thing that they changed for 20 and 21, they called it the 3 martini lunch. But what they've done is they've said normally meals and entertainment are 50%, well, meals. And what they've said is for last year and for 2021, actually, I think it's just for 2021 because they're trying to encourage going forward. But in 2021, the meals that we spent are 100% deductible instead of 50%. So I think they're trying to encourage businessmen to go and women to go out to restaurants and eat more and spend money that way and let it be fully deductible. So that is another little change they threw out there for us. Somebody just said, when's their tax return going to be done? That's a good one. Hopefully soon. Hopefully soon. Yeah, especially yours. Hopefully soon.
Doug?
Yes.
I have a question. So in 2020, it was the first year that I had property that I rented out. What kind of information do I need to provide on that?
Did you buy it last year?
No, I've owned the 2 properties for many years.
Were they?
Well, one of them I've owned for like 40 years. The other one I owned, it's been about 7 years or something. Just taken some time to fix them up. And I had.
All right, so we might have to talk about these more directly in a private conversation, but for the most part, they sound to me like properties that were personal. And when you're dealing with that and you convert to a rental, what you have to do is come up with either the lower of fair market value, so whatever it was worth now, so that's probably not going to be it, or your basis. So basis would be whatever you paid for it plus significant repairs that you've done to it over time. So we're going to need to know that number so that I can set up depreciation for the property. So the basic rule, lower fair market value or basis when you're doing a conversion like that. So that'd be my starting point. And then we would need to know how much rent you collected, the utilities you paid, if you had a management company that was doing it, the management fees. Once you put it into service, in other words, when somebody started renting it generally, then any repairs, I would need to have that listed separately as repairs so that I can deduct that against the income for this year. the taxes that were paid on it, mortgage interest. So anything like that, we would need to know. And normally, if you can just put that for me on a list by category, like utilities, rent, that kind of thing, that will get me going. But the big part is going to be establishing the basis. That's going to be your hardest part, probably.
Yeah, I think so.
All right, got a couple more here. So you mentioned we have to have stimulus numbers and there's no impact. Do we have to have idle and PPP figures? So the stimulus numbers have an impact in the fact that I have to fill out a form. And if I don't, I can't file a tax return. So even if you're not going to get any more, that's the impact there. But as far as the EIDL, there was two parts to that. If you remember, there was the grant of 1,000 per person up to 10,000. That's now considered non-taxable income because they forgave it. Let me know that just so we can keep up with it. But if it's a Schedule C, it won't have an impact. At least I haven't seen where to deal with it there. But if it's a business entity, a partnership, corp, S corp, I need to deal with that $10,000 or 5,000, however much you got, on the actual tax return when we're tying everything out. And the idle amount I need to know because we need to put that in the balance sheet as a liability on the tax return. The PPP is the same thing. I need to know how much you have because until it's been forgiven, it's a debt. And so it needs to go on the balance sheet. Once it's been forgiven, I have to deal with that. So if it didn't get forgiven until this year, which is most of them, for this year's tax return, it's just going to show as a liability on the balance sheet. Once it's forgiven, it then becomes non-taxable income. But it's very important because both of those numbers, even on a Schedule C, as far as that goes, those numbers will add to your basis, which allows you to be able to deduct losses in the future and goes into a lot of different calculations as you go down the road. So we do need to know it, even if it's just for basis information. Does that answer your question, Richard?
Yeah, thanks.
Okay. All right, next one. So on yours, Carol, on the employee retention credit, and like I said, it's 100 pages, came out yesterday. Surprising, I haven't had time to read it. So unless I'm wrong, no, because they've specifically excluded more than 50% owners and their family members. So if you own the company, you cannot get the employee retention credit on yourself. Anybody else, yes, but you or your family members, no.
Hey, Doug, I had a quick question. Because
Sure.
of COVID, I had a bunch of, I guess, gross sales that had to be refunded, and then the cost of goods had also been reversed as well. How will those be handled? And they go back to 2019. So something that we've already put on the taxes in the previous year.
So if they were sales because of you were selling tickets, and so we recorded as income, and then it got canceled. I'm assuming we're probably a cash basis, and there was never any time in the past where you'd have had a reason to wait till the actual event to recognize the income. Well, one of two things, and I'll have to look this up because this one I just haven't dealt with before. Either A, we're just going to have a lot of refunds on this year's tax return, lowering our revenue, or potentially amending the prior year, but I don't think that's going to be the right answer. I think it's going to be a reduction of your income in 2020. But that's one that I'll need to verify. That one's unique.
Okay, thanks.
I tried to cover some of the things that I've just seen, we've been doing the taxes, I've just tried to make little notes when I see things that people aren't quite understanding. And so that's what I wanted to cover. How about false unemployment claims? That's a great question. That's why you're asking it. I don't know the answer to that one. I mean, obviously it's not income, so we're not going to report it on the tax return, and you would need to contact the state and dispute it. How the dispute is going to go, I don't know, because most of this is happening in Kansas and their computer system is a disaster. I think it's just going to be a dispute, and then we'll see how it works out this summer. There is no easy answer to that I've seen so far. It's just it's a mess and people are sleazy. But if you didn't get the income, I wouldn't record it. I mean, I wouldn't report it because I didn't get it. And then we can fight through that with the state when it happens. But I'm not going to pay taxes on $8,000 I didn't get. And I wouldn't expect you to either. For the most part, if it was my return, what I would do is I would file a dispute with the state, and I would file an extension on my tax return to give myself time to get it straightened out with the state. Because if you file it otherwise, there's a high probability you're going to trigger a notice, and then you could have two departments that neither one are talking well to each other, making a mess. So if you're in that situation, I would recommend probably filing an extension and then dispute it. All right, I'm gonna go back to doing taxes. Thanks for coming tonight. I was wondering if anybody would actually want to do this. I feel like there was enough to make it worth doing, and hopefully it was beneficial. If I do one of these in another week or two, just for my sake and yours, if you have some of these questions, try to kind of compile them and put them together and send them to me in advance. So one, I'll be a little more prepared instead of just trying to wing it. And two, it'll allow us to maybe get more of those questions answered, because I know what's going to happen tomorrow morning. You're going to wake up and say, oh, I wish I'd have thought to ask that. And so if you write them down, maybe we can do this a little more effectively the next time. But for the first time, I think it went well. And if you think there's something we could do better, just let me know and I'll try. All right, guys, good night. Thanks for coming.